Good morning, this is DealBook for Friday, July 31st, 2026. I'm Andrew Ross Sorkin, and we've got a packed briefing today, from a hedge fund implosion that's got Wall Street reaching for history books, to Amazon's earnings rewriting the AI investment thesis, to a brewing constitutional crisis over prediction markets, and a full-blown revolt in global soccer. Let's dive in. We told you yesterday to watch for fallout from situational awareness, the high-flying hedge fund that bet heavily and with enormous leverage on the artificial intelligence boom. Well, after a wave of margin calls, the fund was forced into a fire sale Thursday, offloading its public stock portfolio to Ken Griffin's Citadel. It is a playbook Griffin has executed repeatedly during market distress. Remember Melvin Capital and the GameStop frenzy in 2021? The sheer speed of the implosion has Wall Street searching for parallels. Some have compared the situational awareness woes to the market ructions in 1998 that led to the collapse of long-term capital management, or to the failure of Archegos Capital Management. I reached out to Roger Lowenstein, author of When Genius Failed, to ask about the LTCM comparison. It depends on the extent of their debt and the extent to which other firms copycat their investments, he said. LTCM, as you'll recall, had a ton of debt, and its values tanked as imitative firms sensed their duress and bailed out ahead of it or with it. To me, it feels a little more like the dot-com's huge equity investments in a new thing that no one can value with any hope of precision. Let me give you the fuller picture from Rob Copeland's reporting. Situational awareness, run by 24-year-old Leopold Aschenbrenner, a former OpenAI researcher with no previous investment experience, was one of the hottest hedge funds in artificial intelligence. The fast-moving crisis unfolded over just 36 hours. The firm put out an emergency call for help to rivals, seeking to sell more than $10 billion of its stock to shore up its plummeting portfolio. After a brief bidding war overnight, Citadel stepped in. The fund's portfolio of mostly AI bets fell roughly 67% this month, according to the Wall Street Journal, rattling the investment community. "We let you down this month," the fund wrote in a letter to clients. The firm also made emergency calls to Sequoia and GreenOaks to see if they would buy its stakes in private companies, according to Bloomberg. Those talks ended after situational awareness cinched the Citadel transaction. A juicy tidbit: the fund had weighed selling its $3.5 billion stake in Anthropic, the AI lab expected to go public later this year, to those firms before ending the talks. Despite hefty losses this month, situational awareness informed clients it was up about 80% this year. Who is Aschenbrenner? After stints at a philanthropic organization tied to Sam Bankman-Fried's defunct FTX and at OpenAI, he caught the attention of Wall Street and Silicon Valley. 2 years ago, he published a blue sky essay titled Situational Awareness, predicting how AI, and especially artificial general intelligence, would transform society and the economy. That earned him the reputation as the Nostradamus of AI. Big names in tech, including the Stripe founders Patrick and John Collison, and Nat Friedman, former CEO of GitHub, then helped him raise money to start the hedge fund. The AI trade is rebounding today, thanks in part to Citadel's lifeline calming the market, a sign that investors aren't too spooked about situational awareness. But Aschenbrenner's investment advice from a 2024 podcast hangs in the air. Obviously not blowing up is sort of like task number 1 and 2, or whatever, he said then, according to the Financial Times. Speaking of Anthropic, they're having quite a week. The Artificial Intelligence Lab revealed Thursday that several of its most powerful models penetrated the systems of 3 outside organizations, days after its rival OpenAI announced a similar breakout during testing. The attacks, which date as far back as April, were discovered when Anthropic carried out a review of its systems spurred by OpenAI's disclosure. Anthropic, which did not disclose the identities of the 3 organizations, said it had informed them this week about the incidents. Mike Isaac and Kate Conger report from San Francisco that this raises serious questions about AI safety and containment as these systems grow more capable. Also in AI, a group of banks led by Morgan Stanley is in discussions to lend $15 billion to build a data center for Anthropic in Texas, backed by Google, the Wall Street Journal reports. That's a staggering sum for a single facility, and it underscores the capital intensity of this race. Now to Elon Musk. Shares in Tesla rose on a report of the possible sale of its China business, a move that would pave the way for the electric vehicle maker's potential merger with SpaceX, Musk's rockets and AI company, the journal reports. Tesla stock has risen in pre-market trading, even though Musk denied the report. Elsewhere, Musk plans to spend at least $100 million to help Republican candidates in the midterm elections, my colleague Theodore Schleifer reports. A year after voicing deep frustration with the Republican Party and threatening to start a third party, Musk appears to be back in the fold. He's authorized his super PAC to spend $100 million to $120 million on a new field program in at least 8 states to help elect Republicans in November. The planned injection of cash from the world's richest person could reshape the battlefield for control of Congress. In a significant legal clash, New York is suing Kalshar. The state's Attorney General, Letitia James, argued in the filing that the prediction market platform violated the state's gambling laws against illegal gambling because it failed to obtain a gaming commission license. Kalshar responded that states can't just shut down a federally licensed exchange. The Commodity Futures Trading Commission, the federal regulator that oversees prediction markets, filed a motion to stop New York's enforcement action. This sets up a fascinating federalism showdown over whether states can regulate prediction markets that have federal clearance. Now to global soccer, where a full-blown rebellion is underway. UEFA, the European Soccer Association that includes the winners of 5 of the past 6 World Cups, said it would boycott FIFA tournaments until its president, Gianni Infantino, rescinds his plan to sell a piece of FIFA's commercial operations to private investors. CONCACAF, which represents national teams in North and Central America, and the Asian Football Federation have also rejected Infantino's money-raising plan, potentially threatening his grip on power. The Athletic reports that the decision to boycott any competition run by FIFA was taken at a virtual meeting of the 55 national associations which are members of UEFA on Thursday. UEFA later confirmed its stance, saying it and its members unanimously oppose the plan. CONCACAF's 41 members met Thursday, and sources say the vast majority expressed they are losing confidence, or have lost confidence altogether, in Infantino as FIFA president. FIFA told its 211 member associations Tuesday that the plan needed to be approved by September 19. That deadline now looks very ambitious. Let's turn to the tech earnings that are calming markets today. Tech stocks are rallying again, easing fears of an artificial intelligence bubble. The catalyst is Amazon, whose second quarter results solidly beat Wall Street expectations. Now that earnings reports are in from the 4 biggest hyperscalers, Google's Alphabet, Microsoft, Meta, and Amazon, an investment thesis is beginning to crystallize. As long as you have a humming cloud business, investors are willing to look past huge AI spending. Drilling down, revenue at Amazon Web Services, its cloud business, jumped 37%, its fastest growth in 4 years, as its investments in data centers are generating significant AI income. Shares are up roughly 11% in pre-market trading. Microsoft, which reported robust cloud revenues on Wednesday, saw its shares rally yesterday, adding a record-shattering $450 billion to its market capitalization. Amazon raised its projection for capital expenditures this year to $220 billion, from $200 billion. Andy Jassy, Amazon CEO, said it was aggressively spending to meet soaring cloud demand. Investors seem comfortable with big capex spending if it generates returns. They were willing to look past Amazon's disclosure that huge outlays would make it cash flow negative on a trailing 12-month basis by this quarter's end. Investors weren't that kind to Alphabet when it reported something similar last week. Alphabet and Amazon cloud revenues are getting a boost from a common source, Anthropic. The AI lab has committed to spending more than $100 billion over 10 years on AWS services. That's right, the same Anthropic whose models went rogue is now anchoring the cloud economics of 2 hyperscalers. It's not all great news in tech land. Apple's shares fell more than 7% in pre-market trading after it projected weaker than expected revenue in the current quarter, as a chips crunch weighs on its core hardware business. Callie Huang reports from San Francisco that the company recently raised prices on a number of products because of component supply shortages caused by the AI boom. After 15 years leading Apple to become a money-making behemoth worth nearly $5 trillion, Tim Cook bid adieu to Wall Street on Thursday. He's passing the baton while Apple is at a financial high, with revenue growing 16% year-over-year to $109.42 billion and profit up 27%. But the forecast disappointed. Now to energy markets, where more volatile trade has pushed oil prices higher this morning after Saudi Arabia said yesterday it was forming a coalition to protect shipping in the Red Sea. Brent crude, the international global benchmark, is on pace to have climbed roughly 20% this month. Iran continues to keep a tight hold on the key Strait of Hormuz transitway. Saudi Arabia has turned westward to the Red Sea as an alternative route for its exports of crude. But that shipping lane has now been threatened by attacks from the Houthis, a Yemeni militia supported by Iran. Vivian Narim and Michael D. Shear report that Saudi Arabia is forming a military coalition to protect shipping in the Red Sea as attacks by the Houthi militia imperil a crucial route for Saudi oil exports and further threaten the global economy. The kingdom has invited around 50 countries to join the new maritime coalition, which would be Saudi-led, and is pushing for them to commit as soon as possible. Rebecca Elliott, who covers the oil industry for The Times, has been reporting on how the Iran war is disrupting global markets. You can watch her breakdown on DealBook's Instagram page. Let's switch gears to our weekly conversation with a business leader about AI. This week, Ravi Kumar, who runs the technology services company Cognizant, told our deputy editor Sarah Kessler that every one of its 350,000 employees has an AI fluency dashboard. He described how his team built an agent that goes into the company's tribal knowledge, minutes of meetings, emails, chat messages, and comes back with patterns. This customer has friction, this sentiment looks bad. With this tool, he's able to proactively say, "We found a friction point in the project we're delivering. We're fixing it, but we wanted to let you know." That's a very powerful way of changing how you communicate to clients. On hiring, they're hiring more graduates this year than last year. If you're a software engineer joining out of school, there's a 12-week boot camp where they teach you how to be asynchronous and autonomous. You macro-delegate and you micro-steer. You're an agent manager. That mindset is easy to structure at the bottom of the pyramid because people have never done it a different way. The AI Fluency Meter tells you the tools you use, how much AI is in your flows, your token consumption, and gives you a composite score and a peer score. You double-click, and it'll tell you how to improve your score. Is it part of performance reviews? No, it's private to you. Management won't see your score, they only get aggregate stats. And that actually takes anxiety out. Now for the speed read. In deals, the sandwich maker Jersey Mike's and the women's fashion retailer Reformation made weak IPO debuts as the private equity-backed consumer companies failed to excite investors. Blue Owl Capital's private credit division raised $1.8 billion in the previous quarter, its least in 3 years, amid a flood of redemption requests from worried investors. In politics, policy and regulation, the Trump administration is weighing charging foreign students enrolled in U.S. universities a $100,000 fee to stay in the country to work after graduation. Meanwhile, some companies and trade groups are gaining tariff exemptions by ostensibly cozying up to President Trump. Anna Swanson and Gina Smialek report that natural diamonds were once again exempted from tariffs after negotiations with European officials and months of sustained advocacy by the Antwerp World Diamond Center, which also presented a remarkable gift designed personally for Mr. Trump. And meet Meredith O'Rourke, Trump's chief fundraiser, hitting up companies for donations. Best of the rest, this Bay Area pastor created a digital twin of himself to talk to his flock. Eli Saslow profiles Justin Lester, 37, pastor of Friendship Baptist Church, who built an AI duplicate of himself to meet the growing needs of his congregation. Every day he sees more people using it. And if you want a summer in Bayview, Michigan, you'll need 4 reference letters and years of patience. That's your briefing for Friday, July 31st. We'll see you tomorrow. If you have thoughts or suggestions, email us at dealbook@newyorktimes.com. Follow us on Instagram @NetDealBook. Have a good weekend.